Hi, everyone. I'm Dave.
And I'm Jeremy.
Welcome to our Tech Over Coffee podcast. We're so excited to be filming from our main campus for Chipola College in Marianna, Florida. We have this beautiful studio. We're thankful for Chipola College to be sponsoring our podcast. Chipola College gives you an opportunity to look at many topics, business technology, to collaborate, just like Jeremy and myself. So we're excited to share our podcast with you this week. What do you have for us, Jeremy, to get us started with?
Yeah, so we've got a couple things, right? I think last week we ended off talking about some interesting stock market news, as they call on Reddit, the stonks.
Wow, that sounds tough.
Yeah, it can be tough, right? Like if anybody that's invested money into the market knows that there's volatility. There's like the chance of losing that money that you put in. But in this situation, and specifically we're talking about GameStop. And GameStop's gone up insanely high, right? Like started off somewhere around $5 and has gone up to near $300.
Wow.
And that's in the span of like less than a year.
And GameStop, that's kind of a business model that you would think may not last very long. Amazon is going to put that out of business, or anybody who can deliver the product to your door.
Well, an interesting little bit of like side story there is that GameStop's actually been acquired by, have you heard the company Chewy?
Yes.
Yeah, so it's actually been acquired by that company, which...
Wow. Pet treats.
Yeah, it's pet food, dog food, all of that kind of stuff, which is makes a lot of sense for like subscription-based services, right? And competing with Amazon on the like ship to your door like marketplace there. So there's an idea here that like GameStop might be able to use this stock jump to completely rebrand themselves into something different, right? You're still selling Xboxes, you're still selling PlayStations, you're still playing Nintendo Switches,
Yeah, subscriptions could be its future to really, some monthly sign-ups and people just pay on a continuing basis and they provide access.
Right, and that's always good because if you have a recurring payments coming in, you can really use that on the back end for your financials. But in this instance, the reason GameStop price has moved up so high is because of completely unrelated circumstances. It's not about GameStop as a business or any of this stuff going on in the background. It's about hedge funds making big bets that GameStop's going to go down. And they've been making those bets for like 5+ years, pushing it all the way down to nearly nothing, hoping that GameStop will just go bankrupt. And in the end, actually moving it beyond the point that they should have. Because what they've actually done and what they did is they shorted GameStop stock to the point that they were like 120 to 140% past the like limit, basically. There's only just 100% GameStop stock available. And when they're shorting something, they're borrowing this stock to sell and then buy back later at a lower price. Instead, it's done the opposite.
Hence making their profit.
Right, yeah, it's because you sell it today at $300 in hopes that you can buy it back tomorrow at $200 and pay the bill. An interesting thing that I learned about this is that short selling stock has gone back to the earliest days of like stock selling, because there was apparently, when you had a chance to sell a stock, you had a number of days to present the stock to the buyer. And what that essentially allowed people to do is sell it when they don't have it, and then go find it from someone and then hand it over to them in the next couple days.
Yeah, that shorting, wow. If you take the American lens and just looking at, you want to support companies, it seems like you want them to do well. So shorting a stock almost seems, can you say that anymore? Un-American? So the thought of
it's pretty American.
It is. Honest. They're making billions.
Yeah.
So the thought of these hedge funds were actually betting that this outdated business model, GameStop, is going to fail. So they just said, we're going to short it, and we're going to make billions on it. And wow, social media, props to them. Yeah. So they're like, not so fast. And so when you short a stock, that means, like you just described so well, that some date in the future, you actually have committed under contract to buy that back.
Right.
So when social media just starts putting all their energy and money into this stock, they then have to buy it back, and so the stock just started going up.
Yeah.
So they had to keep buying it at the higher price. So the line in one day for GameStop was like straight up.
Just a direct line up. You had this like straight line, and then boom.
That's right.
And it's all because as the price goes higher, they lose more and more money. Because with short selling, you really don't have a limit to your losses. It's until the point that you run out of money, basically. And in this case, we're talking about billions of dollars, like multi-billion dollars.
Yeah, one hedge fund lost 50% of its income. That's
They're
it's $3 billion.
likely to go bankrupt, I think. Yeah, which is kind of insane, but it's...
When you're a billionaire and you go bankrupt, is that worse than just going bankrupt for and like the average person?
I think it might be better. I think it might be better because you lost more money, right?
Oh, yeah.
The more money you lose, the better your bankruptcy.
All right.
Yes.
Okay.
So essentially what's happened here, though, is that like they've just made bigger bets than they could really handle. And
in normal conditions, they would have made, money hand over fist.
yeah, and they were making money hand over fist for a long time. But what they've done is that they were losing the money. Their positions were getting further and further in the red. So what they do is, as the price is going up higher, well, just short some more. And so they continue to do that until it got to that point where it's over 120, 140%, where they literally can't get enough stock to cover their positions anymore. In some instances, there are concerns that they were actually doing something called naked short selling, where they were actually they didn't have the stock. Like they were just short selling it in hopes that they would just get it back later.
Which does happen quite a bit.
But
much riskier.
It's very risky and something that I think might be illegal.
Ooh, well,
in certain instances.
We're going to find out now, though, right?
Oh, there's going to be investigations.
Most
and
certainly.
There's the SEC is getting into this stuff to kind of look at it. And what's happened from this, right, is that that's just the beginnings where you have the Redditors, the people online that have figured this stuff out.
We
Because
started a new word.
it's people that are on Reddit, right?
Yeah.
So you have the people that have done this financial analysis because you can see how many shares of a stock are shorted and like what the percentages are. And so people did the research, saw that, hey, if we just buy it and don't sell it, they're going to be forced to do it. And what happens is you get liquidated. You get told you have to buy or you have to sell. You have to,
There's only so many shares available, so they actually demand a call and they have to sell it. That's right.
And that can affect other stocks in their portfolios as well. You had one of these hedge funds that got liquidated on their Alibaba positions because they basically had to sell something that was good to cover their bad bets.
Wow. So it has a ripple effect.
And it has, and it's affected a lot of other parts of the market, and it's spread. And so what happened then is that you've then had brokerages have to shut down buying for some of these stocks because of the volatility. And it's a different range for the different brokers. So Robinhood is a brokerage firm. They are set up, I think, 3 different entities. One is their cryptocurrency business. One is their retail brokerage. And then they have their own internal clearinghouse, I think, where they actually are making the buys and sells because they act as a market maker on their own market as well.
Yeah, Robinhood is an app. That's kind of how it
Yes.
started. Where you can, instead of having to buy a full stock, say an Amazon share might be $3,000, you can buy just a percentage or a portion of that. It's gained a lot of momentum. That's really creative way to invest.
They were the ones that really pushed the fee-free trading idea, and the other brokerages have moved forward with that as well. Schwab, TD Ameritrade, I believe, do free trades now in response to Robinhood because Robinhood was taking a lot of their business. But the thing is that Robinhood and a couple other new ones that I've actually just heard about, Webull is one.
I've heard of Webull, yeah.
Yeah, so there's...
is that a Chinese version?
I'm not sure.
Okay.
I think it may be. I don't really
Okay.
know. But it's Chinese have gotten on to a lot of this too. There's a lot of volatility.
They're leading in many of them as well.
Yeah,
That's right.
So what's happened there is that these younger brokerages have had to pull back the ability for people to make some of these purchases because in some instances liquidity problems. And Robinhood has not done the best job in letting people know this because I guess it would make them look kind of bad. And they've kind of left it up in the air. And they, for a day, completely shut down buys for GameStop, AMC, and a number of different, I think Nokia. It's funny, right? You have BlackBerry, Nokia, AMC, the theater company, which is funny because there's also another one, AMCX, and that's the one everyone was talking about, but people bought AMC instead. So
And it's kind of weird. BlackBerry has actually been going up.
Yes.
I mean, because of this same type of momentum.
exactly.
You're
It's,
like, what, BlackBerry? I remember hearing about that back in the day.
Yeah.
So
yeah.
it's a far-reaching impact.
People would be buying Radio Shack probably, right?
What's that?
It's a place where you can buy radios.
Oh, yeah.
I think.
Yeah.
Yeah.
So I wish my utopia lens, I wish that's how we invested, where you just thought, well, SpaceX, what a wonderful opportunity. They're private. Let's go public. Let's just buy in the future of space, the future of mankind. And shorten it is the opposite of that. Let's make money and someone's just overreach. They're stumbling, they're not going to make it. Let's make money on that.
That's part of how Tesla's stock has gone up as high as it has, is because of short squeezes. Because what's happened here is the price has gone up.
People were not believers.
Yeah, people think, no, there's no way this is going to work. And then all of their money that was going for the price to go down is now forcing the price to go up, and they have to jump in front of each other to get it done.
And Tesla was hit a little bit last couple of days, and they're up strong, mid 800s today.
Yeah, it's pretty interesting because you've actually, to kind of finish off this whole
I kind of jumped ahead. Love Elon, SpaceX, but let's bring it back.
But it's all interconnected here, right? Because so Robinhood and these other companies have had to kind of shut down their buying. Where bigger brokerages haven't had to. And the reason for this is actually because of the SEC and the depository trusts have put on deposit requirements for these brokerages to have, depending on the volatility of different stocks. So Robinhood had to put up $3 billion, which is more money than they've even gotten in venture capital funding, to shore up basically their stock purchases. Because there's so many people hearing about this and so many people going out and trying to buy this stock that's up 900%. There's literally like millions of people trying to do this all at the same time, that basically they couldn't afford to do that. Where a different brokerage like TD Ameritrade or Schwab has enough money to just say, hey, well, you just can't do as many options. Where Robinhood is limiting people to buying only a single share.
And there's no one helping Robinhood. I mean, there's a lot of headwinds. I mean, there's a lot of haters out there. They're like, what? Who are these people making this money and kind of taking it from us? So they're creative. We should do some research on those who founded Robinhood. That's a creative approach to investing, and they were ahead of the curve. I mean, they're very much following Elon Musk's approach of just kind of trailblazing, of setting the path for others to follow.
Yeah, and a lot like Elon Musk, they were focused on cryptocurrencies as well. Because that's a lot of their early stuff, is focusing on instant trading, cryptocurrencies, fee-free trading, which is all in that realm, trying to bring in a lot of the more younger investors.
That's right. The investing kind of came later. Crypto was the first step.
Crypto was a lot of the early stuff, yeah. And Elon's actually now put #Bitcoin in his Twitter bio.
I read that, yeah.
And I mean, he's full on Bitcoin now. Like he's actually like seen the truth, And
I was reading today in the Wall Street Journal that some are saying that the blockchain could probably help something like this from happening in the future.
Yeah.
So this technology, the only thing that Bill Gates ever said was worth anything, could actually come full circle and save the market.
Yeah, it's because a lot of the issues with the market and this stuff that's going on now is you have people that are going out and they want to buy stuff, but you actually have rules and regulations on the amount of volatility that's allowed. You wouldn't really think of it that way, but there are like stops and circuit breakers and things in place to prevent stocks from going too high too fast, or too low too fast even, because they basically don't want too many people to lose too much money too quickly, and especially when it's hedge funds.
That's right. The ripple effect is huge. Like you mentioned, these parting firms, that partner on different projects, they can be impacted. Then investors trying to withdraw funds are impacted.
Yes.
And you see a huge crash, which is bad for not just our country or investors, but for the market overall.
Yeah, and it's a lot of people that have money in a lot of different things, and it's spread even to bigger companies like AMD. Like AMD, which has gone up significantly over the last couple of years, is also being hit with this same volatility and these same depository requirements because of that volatility. So Robinhood's also stopping people from buying crypto immediately. They're stopping people from buying AMD. It's kind of weird, and it's going to push people away to the bigger brokerages because they're able to comply with these regulation requirements.
Right, which is what they want. They're trying to make it harder for Robinhood and others like that to survive. So they're not going to have an easy go of it. No. Again, not bringing it back to Tesla, but they didn't have an easy go of it as well. So sometimes you got to push through, and if you push through and survive, you're going to have a big reward waiting for you. I mean, Elon now, the wealthiest or second wealthiest man in the world.
Yeah.
So the
he's
rewards
jumping all over the place.
Yeah, so the rewards for Robinhood will be there if they can survive. They may not survive because there's not going to be a lot of people trying to help them make it.
Definitely not. They've at least got new investment money coming in. They've tapped new lines of credit. But that's a lot to handle, especially for a new like budding financial services.
Yeah, what was the
company.
number again? $3
It
billion?
was $3 billion
that's a
they had to
lot.
come up with.
Wow.
In the end, they negotiated it down to only like 750 million, but part of that is stopping people from buying these stocks. And then also there's some speculation on the back end. They have deals with different hedge funds themselves where their market making is done by these different hedge funds and other corporations. So the way Robinhood makes their money is not through their fees, but by basically selling market book information to other entities. So they themselves are even like working their own market to like make the buys and make the sells. So in some instances, they could be helping themselves by preventing buying. But of course, they don't limit selling. You can sell as much as you want.
Now they raised this $3 billion in what was it? A couple of weeks? It was a pretty short period of time.
It was a good bit of money. They ended up not having to get the whole $3 billion, but they did increase their capital requirements by over tenfold. And this is unprecedented.
Think of how hard that would be. They did that just in a few weeks. I mean, you and me, it would take us probably 6 months to raise $3 billion, right? I mean, it would
might
take us a while.
It'd take me a couple hours, but I don't know how long it would take
Well,
you.
that was including me with you.
Oh,
yeah.
with both of us, yeah, we could knock it out, no problem.
Right. 6 months, so they did it in a couple of weeks. That's
Yeah.
impressive. Yeah.
Yeah, it's a lot,
Right.
and especially for a newer company, and all of that does have a ripple effect. Like you said, it's affecting cryptocurrency prices. It's affecting gold and silver prices.
Yeah, gold's up.
Yeah, silver's up to like $28 again, which is pretty cool.
That is cool. You own silver?
I own a little bit of silver.
Oh, nice,
Yeah,
nice, yeah.
You know, got to have the hard currency.
Yeah. All right, good. So what do you have for us maybe planning for next week's podcast?
Next week, I don't know.
Okay.
Who knows? It's
Well, we
all-
had a
all
few
sorts of stuff.
topics, yeah.
Yeah.
It's changing weekly, so or daily, I should say.
Well, I mean, we've got some more Tesla stuff, right? Tesla's announced their
The S?
the Model S refresh,
Yeah.
which is really cool. They're
Right.
getting rid of the normal steering wheel, and it's being replaced with a more like a plain like yoke is what they call it.
Wow.
It's like cut off the top, and it's like a race steering wheel.
And does this one have the new battery mold in there as well?
I'm not sure.
Okay.
I don't know.
Because they had 3 years. They were saying it would take them to
Yeah,
release that.
they're working on that. They're getting
Yeah.
it in. I think it's still going to be on the 18650s, but it's going to be upgraded, of course. Adding new screens, it's going to basically have a gaming computer built in, which is kind of wild.
Wow.
Makes my car seem like it just has like a Raspberry Pi.
No, your Tesla is very nice, but still, yeah, gaming computers, they even go with driving. It seems like that would be counterproductive.
Well, think about it, right?
It's driving by
They're-
itself, right?
Well,
You're just
they're
along for the
even
ride.
getting rid of the gear change like stock, like changing from reverse to forward and
Wow.
and park.
You just push a button and it just does it.
Not even. I think they're
You
trying
just
to
think it and it happens.
I think they're setting up cameras to like see when it pulls into like a spot and it's like, oh, you've got a wall in front of you. You must be wanting to go backwards,
Wow.
not into the wall.
Yeah.
Maybe there's some eye tracking involved. I don't know. I'm unsure about that because if it doesn't work, you're stuck pressing on the screen because there is an override. But
And that's the natural steps for an AV to be happening next, for
Yeah.
autonomous.
yeah, right.
So it's getting close.
To let it handle all of those things, and if they can get it done right, that's pretty cool.
Cool. And as we end here, seems like we're missing something.
Yeah,
Did we forget something?
I'm not sure.
Okay,
I don't
yeah.
know. I don't think we did.
Okay, cool.
I don't
All
think
right.
I don't think we forgot anything.
Well, thanks. I look forward to
Yeah.
next week. All right. Bye for now.
Bye.